Yeah, I think the next 2 years or 3 years look very constructive. I think basically we have this window where the next 6 months, there's a lot of variables. So I think that basically next 6 months for Bitcoin, very unclear. I can make the case for retesting the lows, or I can make the case for, not going below 25,000. But that I think that the 2-year or the 3-year case is very, very strong. I have high conviction that basically we'll probably have another positive liquidity cycle in that environment.
Lyn Alden, a well-known financial analyst and the owner of Lyn Alden Investment Management, has provided her most recent estimates for the value of the biggest cryptocurrency. We are currently observing the convergence of a number of macro and economic events, which are having a negative impact on the pricing in the cryptocurrency market as well as the total level of investment in the United States. First off, the Federal Reserve continues to convey conflicting information regarding probable future rate hikes. The stronger than anticipated economic statistics on Friday shocked policymakers. Consumer expenditure increased by 0.8% in April compared to the previous month, according to the most recent inflation statistics. Also rising from 4.6% to 4.7% was core PC inflation. Not only is it increasing once more, but we are still well below the Fed's 2% target. Increased consumer spending may indicate that the U.S. economy is not likely to enter a recession, but it will surely give authorities more incentive to announce additional hikes even if analysts are strongly cautioning against such moves. The Treasury Department is also at the moment emptying its pockets. Until the debt ceiling is increased or a default happens, the government will continue to pay its debts through the Treasury General Account. As a result, the impacts of some of the Fed's quantitative tightening policies are being offset by the drawdown in the TGA. The Treasury Department will start actively replenishing the country's coffers as soon as the debt ceiling is increased. The economy may face further difficulties in the second half of the year if the Fed keeps up QT while the Treasury is also draining liquidity from the markets. In a recent interview with Kiko News, Alden takes all of this into account when determining her short and long-term predictions for Bitcoin. Depending on the future moves made by the federal government and the Treasury Department, Alden predicts that the U.S. economy will be like Rocky in the next months. The financial analyst anticipates that it will have further effects on Bitcoin values and maybe push them back down to the lower 20s. Alden does anticipate that in 2 to 3 years, the top crypto asset will make a strong comeback. The financial analyst anticipates that by that time, Bitcoin will be on course to reach 6 figures once more. Please take a moment to like this video, subscribe to the channel, and enable post alerts before listening to Alden's complete analysis and forecast so you won't miss any of our regular uploads.
So I think on the surface, the narrative is pretty clear, where basically it's, the banking system's unstable and people say, well, I can self-custody money with Bitcoin. I don't have to worry about counterparty risk. I think that's part of it, but I think probably the bigger move is basically due to markets repricing their forward expectations for how aggressively the Fed can hike rates. So we saw, for example, that 2-year treasuries stopped increasing. We saw that, as you pointed out, the market's pricing in cuts by the end of the year. And a lot of that changed pretty rapidly, beginning with the banking crisis. And when you had a softening of forward expectations for how hawkish the Fed can be, then it gives a bid towards kind of anti-dollar trades, scarce assets like gold and Bitcoin. And so I think the biggest move that we've seen probably in this thing is not necessarily the narrative itself, but the kind of the structural market implications of rates. So I think as the Fed shifts from, tighten money as tight as possible, control inflation as much as possible, and instead kind of balance that between financial stability, that's what's given Bitcoin and other scarce assets a chance to catch a bid. I think the challenge is that when we go back to those liquidity questions I talked about earlier, like if the Treasury tries to refill its Treasury cash account really quickly while the Fed's still doing QT, it's probably not going to be good for Bitcoin for, say, a multi-week period, most likely. But when you do get some sort of pivot, either the Fed ends its QT program or has to launch some sort of new liquidity program, or the Treasury has to take some other action, I would be a buyer of that capitulation if we were to get one. Bitcoin formed a very big bottom in late 2018, early 2019, and then it grinded significantly higher, but then it kind of retested that bottom very briefly during the March 2020 sell-off. And so it didn't hit like lower lows, but it did kind of briefly go back and plumb those depths. And the difference was that it didn't stay there for many months. It just kind of had this like big flick down, and you had the liquidity response, and a number of weeks later, it was already back up to well above that bottom. And I think you could see a similar thing where you get kind of a brief problem that brings it down maybe lower than we expect. But I don't think it would stay in that lower band anywhere near as long as it did in this.
What is the price range of that lower band that you consider to be the bottom?
I think I wouldn't be surprised to see it touch the lower 20s again if we get that specific scenario of a liquidity crisis from trying to refill the Treasury General account. There are scenarios that I think could push it to the upper teens yet again. But I think that would be it probably spend less time there than it did in this prior bottom. And instead, if they actually front run this, if the Fed ends quantitative tightening before you get the Treasury pull up, or if the Treasury does proactively kind of focus on issuing T-bills or increasing their Treasury account slower, then I think you're much less likely to retest those lows. The next 2 years or 3 years look very constructive. I think basically we have this window where the next 6 months, there's a lot of variables that I think could throw us off. I think Stanley Druckenmiller said it best. He's like, I can make the case for deflation, or I can make the case for 8% inflation. Mm-hmm. And I think he's touching on the same kind of uncertainties I'm touching on here, which is that there's very key decision points that a handful of individuals can make, and that can determine pretty big swings in what happens. So I think that basically next 6 months for Bitcoin, very unclear. I can make the case for retesting the lows, or I can make the case for not going below 25,000. But that I think that the 2 year or the 3 year case is very, very strong. I have high conviction that basically we'll probably have another positive liquidity cycle in that environment. And right now the valuation is very attractive, compared to its longer term, say, moving averages. I also think if you look at Bitcoin holding behavior, generally one thing you see in bull markets is that long-term holders begin selling some of their Bitcoin because they're up 5x, 10x, all this new money's rushing in, and they're reducing their positions. When you have bear markets, you generally instead see long-term holders are not selling, that they're buying more. And you start to get a very large percentage of Bitcoin that haven't moved in a year or more. And right now we're very tight in that metric. Basically, we have a lot of indicators kind of either pointing that the bottom's in, or that the bottom at most is likely to be retested. And so I'm very constructive with, say, a 2 to 3 year view. So I might push it out to late 2025 to give myself more room, but I do think there's a good chance of seeing 6 figures in this next, call it 3 year cycle. That's not for sure. I wouldn't go levered long and assume that to be the case. I wouldn't build a business specifically that's going to happen, but if I were to say my base case is I would expect to see 6 figures over, say, the next 3 years. I think we start with 100,000 or 120,000 and see if we get to that before making higher conviction, higher price targets from there. I think the biggest signal is that the Fed has to begin changing its hawkishness, despite the fact that they haven't met their inflation targets. So for example, if you go back to 2019 during the repo rate spike, in September of 2019, the repo market had all sorts of problems, and the Fed had to abruptly end their quantitative tightening and shift to a form of quantitative easing, and they had trouble explaining why they had to do it. And it was in large part because you had T-bills crowding out bank reserves. And if you see a similar environment where they have to kind of pivot prematurely, and yet that happens in an above target inflation environment, I think that would be a sign that they've kind of lost control of inflation, and that that would be a very strong signal to want to buy other assets, either hard assets or generally anything that would benefit from a weaker dollar at that point.
Due to the status of the U.S. economy right now, Alden's short-term expectations for Bitcoin are quite pessimistic, like practically everyone else's. However, the renowned financial analyst thinks Bitcoin may trade above 1 in the long run. A 361% rise from current prices would be $100,000, maybe in the range of $120,000. This would strengthen Bitcoin's reputation as a safe haven asset and draw in more individual and institutional investors. What do you think of Lyn Alden's assessment of the U.S. economy at this time and her forecasts for Bitcoin? Please post your thoughts and insights in the space provided below. Also, make sure you enjoy this video, follow the channel, and activate receive post notifications to ensure that you never miss one of our routine video uploads. Thank you so much for watching.